It's the Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Michelle, did you know that the Amgen Tour, those guys are going to be riding through town 3 different times?
Yeah. It's pretty
cool?
Crazy. They start out with just a couple of slow laps. They head out to Windsor. They come back through Santa Rosa. Then they go out, and then they end in Santa Rosa, right?
Yeah. So they're going to actually pass in front of Bay Equity Home Loans office on the corner of 4th and E. There's a plug in there somewhere, folks. On the corner
subtle.
of 4th and E. very, very not subtle at all. They're going to pass our office 3 times.
Oh, really? Oh, that's great.
Yeah.
Very cool.
So, or maybe it's 2 times. But yeah, right in front of us. So that's going to be really cool. I'll be out there with a big old cowbell.
Oh, fun.
More cowbell. That's for the Generation Xers out there who know what I'm talking about. More cowbell. Hey, so we talked about the 17 million or so folks that are going to benefit potentially from HARP 3.0. And yes, HARP 3.0 should be interesting. It's going to be played out. We're probably not going to see anything happen with it until after November because of the presidential election. And then, of course, there's going to be some battles that brew through Congress because this will be this is going to take the HARP refinance program into new directions. So, hey, I'm George Adair, Loan Show. Thanks for tuning in here every Wednesday at 12:30. Taking your calls live, 636-1350, 636-1350. I'm here to answer your questions about how to deal with modification issues on your mortgage, how to potentially look into other directions. So let's talk about HARP 3.0's potential options. So the first was, hey, if you have a loan that's not owned by Fannie Mae or Freddie Mac, maybe we can refinance it through HARP 3.0. Well, that is problematic because it means, first off, Fannie and Freddie have to be funded more than they already are. And they are going to take on even more of the high-risk debt of the country, homeowners. So these HARP programs have to be implemented in a fashion that takes those risks into consideration. Generally, they do it by having higher rates, but that's not really enough. So they have to have good underwriting guidelines. So you have to be current on your mortgage, right? And that's going to be the first attempt to push a HARP 3.0 program. Another route is to do streamline refinances. And that typically has been reserved for someone who has an FHA loan. And FHA borrowers know they got in with very low down. They had to qualify with income. But now with the streamline, the income qualifications are less important. In some cases, they don't even have to qualify. And they don't have to have an appraisal for a streamline. So they're thinking, hey, let's work with that program to put homeowners that don't have FHA loans into an FHA loan. It's problematic as well, folks. FHA is underfunded. It has one of the higher defaulting loan rates of all the other programs out there because it does work with homeowners who have less of a down payment, and it works for homeowners who have less credit or no credit history with just minimal credit scores. So that's another route. And then there's a third and fourth route, which are aimed at improving the equity positions. And that's really what everyone wants. Everyone wants to know, hey, how do I use the HARP program or how do I use a modification for what we call a principal reduction? So if you're someone who's $100,000 underwater and you're sitting here weighing whether or not you should keep your house, a lot of that has to do with how much do I owe and am I ever going to get out of that hole? You know, the home prices climbed so steeply that people bought at the top of the market. Well, the top of the market is not the issue anymore. Now it's people who had a loan or had a house that they got a loan, a balance of based on 2002 home values or 2003 home values. That's where we are today. So those people are at 100% loan-to-value ratio. So it's not even about just who's at the top of the market. There's so much more to it. And so finding a way to help people pay their balances down is huge. So these HARP programs is one way to do it. I want to also advocate people should be looking at 15-year fixed loans. I think money is so cheap right now. What I mean by that is the cost to borrow is so inexpensive. You can get these 15-year fixed loans right now if you own your house, you have good credit, good clean mortgage history. We're doing loans at 3.25%. You know, and there's an APR of probably around 3.4. You know, these are programs that people should be looking at. You'll pay your house off in 15 years.
Yeah.
It's crazy to not be taking advantage of that. And so HARP is one program that will help people pay their balances down. They hope to extend a couple of variations of HARP 3.0 to pay it down even faster, incentivizing borrowers if they get a loan term of less than 20 years. Then the government is offering to pay closing costs. So HARP is, I know I talk about it a lot. It provides a lot of fuel and ingredients to the mixture of this talk conversation I have with myself and you, Michelle, in this conversation on the microphone here. But we're going to move into the third segment here, where I'm going to talk about B of A, Bank of America. Most people have dealt with Bank of America at one point. They own a lot of the loans out there still today because they bought Countrywide, which was really a very bad decision for them. And the shareholders have shown their reluctance to support Bank of America. Stock's just over $7 a share. But Bank of America has an answer to the Settlement Act. So stay tuned. The final segment of this show, I'm going to talk more about that settlement and what Bank of America is proposing to do to help participate in the settlement and help homeowners underwater. I think you might find that I don't like it, and I think you might hear me rant a little bit. So if you want to hear me rant, stay tuned. We'll be right back. The Loan Show.
To find out more about Bay Equity Home Loans, call George Adair at 707-583-8100. That's 707-583-8100.
Hey there, Sonoma County. If you're paying over 5% for your mortgage, or maybe you're underwater with your mortgage, you need to stop and listen to this message. I'm George Adair with Bay Equity Home Loans here in Santa Rosa. We're helping homeowners save hundreds every month and thousands every year. We're offering a fixed-rate loan at 4.125%, and best of all, it's at 0 points. You heard me right, 4.125%. Fixed rate at 0 points. Call Bay Equity today at 583-8100. Don't delay. Call us today at 583-8100. We can show you how refinancing into a low fixed rate can save you thousands on your mortgage. Please call 583-8100 and call and ask about the new refinance program for homes that are underwater. The time for a low fixed rate home loan is now. Bay Equity is your home for loans. Call us at 583-8100.
30-year fixed rate APR 4.31. Licensed by the Department of Corporations, number 6053919. NMLS number 238915. Equal housing lender. Although the best time to plant a tree was 10 years ago.
Hey, honey.
What now?
What did that guy from Urban Tree Farm Nursery just say on the radio?
I don't know.
What? Yes, you do. He said that the best time to plant was 10 years ago. And the way I see it, it's been about 12 years since you promised to fix up the yard. I'm really tired of looking in our neighbors' windows and staring at our boring backyard that you keep promising to fix up. Although, the new neighbor is really cute. I think he works out. Maybe you can leave that side of our yard empty.
Cute? I'll go to Urban Tree Farm and get right on it. While I'm at it, I'll pick up some colorful perennials. And maybe I'll check out what fruit trees might work in our yard and start working on the edible landscape you mentioned a few years ago. Cute, huh? I better get the bigger trees and shrubs to hide that side faster.
The best time to plant was 10 years ago. The next best time is now. Urban Tree Farm Nursery. We aren't just trees anymore. Like us on Facebook and get the latest deals and photos of new stuff in the nursery. It's The Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
So we came up with a new website called GetHarpRefi.com. Yeah. So GetHarpRefi.com, G-E-T-H-A-R-P Refi.com is a resource for you, the KSRO listener, to reach out to us, and we will help you determine if you qualify for these programs, okay? You should contact us. You shouldn't just contact your bank. If you contact your bank, you will find that their turn times are 60 to 90 days. Their rates are higher because they have to do higher rate lock periods. Our turn times are approximately 30 days. It's just a completely different experience. So go to getharprefi.com. Give us your information. We don't share it with anybody else. We just keep it with our loan officers who are all licensed, and they will reach out to you and help you determine if you potentially qualified for the HARP refinance program. Okay? Hey, so we were talking about HARP, but now I want to talk about modifications. I just read the press release. Bank of America revs up for settlement agreement modifications. Now, the date on this is May 8th, 2012. This thing could have been written 3 years ago. It's absolutely insane to me that Bank of America is going to go out and they're going to do the same stupid practice that they did before, which is reach out to homeowners, help them determine if they can get a modification. They're going to tell them that they have to be late. Ready for this? I hope you're all sitting down, and if you're driving, pull over. Having a mortgage balance greater than the current value of the property. Well, duh, that's pretty much everybody. Being at least 60 days delinquent on your mortgage payment as of January 31st, 2012. And then final requirement is that you're obligated to make principal interest payments and taxes and insurance. And it cannot exceed, or it has to exceed at least 25% of your gross household income. So there's all these provisions that you have to meet that are negative.
Yeah, they want you to be late on your mortgage
They want you to be
payments?
late. They want you to be struggling. They want you to be underwater. And then they will consider you for a modification. Hey, folks, that's like the same thing that we've been hearing for years. And that's why it's never worked. Then the procedure is once they've pre-qualified you, then you get to make 3 trial payments.
And
now,
they can still pull it out of it after
then
that?
they can still cancel the deal. This is how they did it before. They suckered people in. Customer service representatives would literally tell people the only way that we can transfer you to someone in our loss mitigation department, Mr. and Mrs. Smith, is if you're late on your payment. So you need to go late on your payment in order to be qualified or considered to be qualified for a loan modification. Guys, this is 2012. This is a direct result of a settlement between 49 state attorney generals and all the major loan servicers out there. And Bank of America's response is that they are going to send out 200,000 letters to customers who may be eligible for forgiveness of the portion of their mortgage principal balance. There's no guarantees, and hey, the only way you're going to be eligible is if you're 2 months late. Yeah. Hey, this is monkeying around. It's screwing with people's emotions, people's time. You're just talking about perpetuating, extending an existing problem, and then it's a trial payment program, which may or may not actually result in a modification. And the problem is the Bank of America model will likely be followed by all the other servicers. And, folks, this is why in America you should be choosing who you want to work with for your loans. I just read an article that over 30% of all new loans that are being originated by Wells Fargo. Over 30%. And then round out the rest of the loans being originated out there, 50% of them are being originated by 3 banks. That's not choice. You do have a choice here in Sonoma County. It's with companies like mine that I work for, Bay Equity Home Loans, and we are a direct lender. We offer better service. We offer better rates, a predictable lending experience. We don't take, we're not FDIC insured. We don't take in bank deposits, and we don't have, CDs and money market accounts and savings accounts. We don't require you to establish a depository relationship with us so that we can try and cross-sell you other products and credit cards and auto loans. So your credit unions are doing too, folks. You think the credit unions are any different? Think twice. Who's going to handle your mortgage? Someone who's selling you an auto loan or someone who just does mortgages? Someone who's trying to sell you a credit card at 23% or someone who just does mortgages? That's my rant. I hope you enjoyed it. If you have any questions, you can reach us at Bay Equity Home Loans, 583-8100. That's 583-8100. See you next Wednesday at 12:30.